All right, so welcome to this week's roundup. So this is week 44, I believe. So we're going to be going through price action to analyze, how everything played out. So this is I have the live, markup during the week, but I'm taking all of that off so we can, sort of go through everything on a new slate, right? So I've taken it back to Monday, 3:30 a.m. UTC plus one time. So let's go to the 4 hour and we'll begin from there. So on the 4 hour, what do we have? Clearly here we can see we have a bullish order flow in place. This has been taken, and now the next target for us is this high, right? So this is 4 hours, so this should be 4 hour boss. So our next target is this high. Okay. Oh no, what am I doing? There's a break of structures. Yeah, so I have a boss again. So basically this is where we're at, and now we can see that clearly the market is bullish, right? So like drawing this, so you have here low, high, low, high, and then low, and then what's next thing? High, right? Simple as that. So this is basically what we're looking forward to, right? This is basically it. Now I had also shared this when the week started from Monday. Let me just show you that. So Monday daily roundup, no, daily forecast rather. So Monday, that was 30th. Yes, so what was that again? So this is okay, this was New York session. So yeah, so 4 hour here, so you can see this was Monday. So Monday from on the 30th of October. So you can see this was where price was at, and this was the structure we had drawn. The price was going to deliver here in the course of the week, and this was because this was on the back of we had FOMC coming out. We also had NFP coming out. So there was bound to be a lot of momentum in the market, and it was based on that we knew to a large degree that price was going to deliver to this high. So with that now in mind, we're only interested in trading longs, right? Because we know that structure wise, price should be taking out this high here, and longs were more high probability compared to anything else. All right, so that said, we're very clear, super clear on where we're at on the 4 hour. Let me just put this here, so we'll revisit this by the end of the week. So yeah, I had to show that the forecast, because a lot of times people say, oh no, this is hindsight analysis. By the end of the day, yeah, so at least it's not hindsight, because that was something that was forecasted since when the week began, since Monday. So let's just show some POI, some demand zones, because the market it's bullish. So we'll draw this. Okay, let's draw this one again. This has all been mitigated, so just leave it like this. So we have all of this. So we're now here, our target is this guy here, super clear on what we're looking for, what we're looking at for the week. What now, no complexity there. Okay, so on the 15 minutes, what do we have? Let's identify structure to on the 15 minutes. So this was the last demand zone on the 15 minutes, so we can start from here. This high has been taken out, so that's boss on the 15 minutes. And then of course the low here, not yet mitigated, maybe the zone, the range rather, has been mitigated. So we can draw that, because that has already led to a continuation boss. So that's perfectly what we need. So with this, what do we have next? I'll just draw for this. So we had this break of structure, just interesting areas that we're interested in, nothing more than that. I draw my zones usually on the last candle, except price has reacted to an area. I can then take the entire range. So for now, we draw it on the last candle. Okay, so now with this, what is clear here? We know the market is bullish on the 4 hour. We've established that. There's no confusion about where price should head to. So what we know is that this is the next target for price on the 15 minutes. We have the higher time frame target, the 4 hour target, which is going to be the entire week. And by the way, if you were that kind of you may be a trader who just wanted to swing, let's say for example you're busy and then you don't just want to look at the market, right? The market is opening around here. You can simply just have your stop loss below this area, or maybe even below this area, right? And you target 1 to 2, 1 to whatever they're about, depending on how much you're risking. It could be a good return. So this is enough room for price to do whatever it wants to do and eventually arrive at your destination. You forget about it for the whole week if you can do that, right? Or you even try to extract more, right? Or even you try to say, okay, if this gets taken out, put you a lot here, then you will come into market and look for another position, right? Or another entry. So but anyways, that's if you're trading 4 hour, but we're not trading 4 hours. So let's go to 15 minutes. So on the 15 minutes here was super clear on what we have. So break of structure we had here, new high, prices sort of pull back, and now Monday open, we expect that continuation to take out this high. But how do we, sort of position ourselves so we're able to catch this trade? So that's the next I'm going to be looking at. So 3 a.m. One on the chart here. Let's take it to 6:30. Okay, so 6:30, by 6:30 I'll typically be on the chart. So here you can see we have a few things going on, but no strong momentum to the upside. So typically for me to take a position, I would want to see coming into Monday, I want to see some structure to tell me that hey, price is now ready to go, and then I can now take a position. So let's see if we're going to get that. All right, this is subtle, but yes, this for me is enough for me to say, okay, this is a chalk to the upside. So you can see this. The high of this candle has been taken out by this guy. So with this, for me, I'm willing to say, okay, I can now place an entry, right? Because this also coincides with London Open and also London Open. Yeah, so time and price essentially. So I'm going to do this and then put my stop loss below this area. Now I'm doing this because if the market should go up, I want to have my stop loss, my stop protected, right? So I'm going to put my stop below this area, okay? Just to accommodate for external liquidity, sort of. So you have a lot of liquidity lying around here. It's your session, but then also there's this external liquidity around here which I want to accommodate. It doesn't necessarily mean price would go my way. I can still get taken out, and the reason is this: we still have an extreme demand here. And this is something you also have to be clear. While we have this is also an interesting candle that we have here. So let me just draw this. So we have this, so we still have this area. So if price doesn't work out here, most likely price may pull back, to this area. And then before we get that, that push to the upside. So these are things you have to accommodate for. So for me, I'm going to take an entry here because I have seen this, bullish chalk, right? It's very small, it's very subtle, but it's enough for me. So I'll take a position here, but if it doesn't work out, then I would want to take a position here. So this would typically be it. This would usually have a larger stop because of the range, but it is what it is. So we're going to target this and see if this doesn't work. We get an entry, hopefully here. If we don't get an entry, no problem. Next day is that. Okay, so this is typically how I would approach this. Okay, and this is just it. Okay, it's simple, it's straightforward. Break of structure, new high. We know the market is trending bullish because on the 4 hour we've established that. We know where price is going to. When interested in shorts, we're simply just following what the market is offering us. So let's see how all of that played out. Okay, price reacted perfectly, wonderfully well. Now I wouldn't typically move my stop loss even after this price action. If it's a loss, let it be a loss. If it's a win, let it be a win, right? So no need to rush things, and that is it. So that was the first loss that was registered for the week, but no problem, right? Because we also accommodated for the fact that price could push lower into this area, but it doesn't also mean the price has to tap this area before going the other way. So yeah. Okay, perfect. So this taps into it. So let's move this. Perfect. Okay, there you go. And that was it. So London session coming to a close. Price is pulling back. New York session right now coming on board. And okay, a little bit of structure yet. If we wanted to trade a continuation, this was an opportunity to do that, but I'm not sure. That would have given a nice entry because we have here, just enjoy, there's the last candle down. So it's also a sweep, by the way. Look at this candle here. Candle swept that area, that low. Okay, so this could have also been a continuation setup here with your stop loss below here and target the same high, conservative high, 1 to 3.5. If at all, price gives us an entry, right? And that's it. So this did not work out. Price did not return there, and then we took one loss and then one win, so 3.124 thereabout. Okay, so that was the first trade for the week. So and then this is New York session. So essentially, our first target have been hit. So that'll be it for us. So 2 trades enough to go cool off, for the day. All right, so this is already 5, so I'm done for the day. Take it to the next. Take it to 6 p.m. Okay, 6:30. So we're back again to the same thing. So what are we looking at? What are we looking out for here? Are we looking for shorts? The simple answer to that is no, because we've already established the fact that this week the target for us is on the 4-hour previous high. So we're very clear on what we're looking for. We're only interested in looking for longs. So now coming into London session, we're still going to draw our structure again. This is the last high. Perfect setup for us to target. So we have that there, 50 minutes. Yeah. Okay, so we have that. And then what else do we have? So here you can see price after taking out this high, made this high, pull back before registering this high. So I'm going to take this as my continuation balls. Yeah, and then here we have this low. You can see here this candle here. You can see that price swept it, equity sweep. So let's see. So this was Tuesday. So you can see price here swept this low, right? And then eventually that sweep, we had a high pullback and then leading to a chalk. Now what do we have here? Let me explain some things here. What is clear again is our target. Was super clear on our target. There's no confusion. We know where price is meant to head to, and then we're simply just following market structure. We're not making any assumptions. We're not having any I would say our bias is longs, because we know the high time frame, we're looking at longs and all of that, and that just makes our job easy. So here we have a chalk. So I'm just going to draw that. So after we have a chop, what do we expect? We expect to sort of get that pullback that would now give us an entry, and then we can target this high, right? Now we also need to understand that here you have all of these unmitigated zones. Let me draw this. Got this candle here, the last candle down. So we have all of these unmitigated zones. So there's every possibility that price could also use, this area as inducement into this areas before we get that push up, right? There's a possibility, but we don't have to. We can't say we know what price is going to do exactly. We always have probabilities in terms of price is going to go here, price is going to go there, based on certain maybe setups and all of that. But we don't have any assurance to say, okay, price must do this. It's not like that, right? So but anyways, we'll have this. So typically for me, I'll have an entry here, but I also make accommodation for just in case this doesn't work out. Now already I've seen the confirmation I need for me to say prices actually may work out, right? But also there's nothing that's cast in stone, right? So I know that if this fails, then I should get, if price uses this area as an inducement to this area, then I should get an entry, and hopefully that works out. Okay, now another thing we also need to bear in mind is this is London Open. This is already approaching London Open, and as a result of that, we're going to be getting a lot of momentum. So time and price also plays a factor on how we inform our entries and all of that. I go into more details in the course and the program, but that is not for here. So here, change of character. So what do we expect? We expect a pullback. So this is what we're looking forward to. We get tap in, and then we get that yeah, and then this high gets taken. So this is what essentially we're looking forward to. Also, just to say, this is not just hindsight analysis. This is something that was shared in the core in the Discord group, the community. So that was on Tuesday. This was Monday New York session. Tuesday here, let me show this. So 4-hour, you can see 4-hour 50 minutes chart. You can see price was here. Our target was still super clear. All the analysis was still saying the same thing. Our target is here, and you can see the structure here on the 15 minutes, everything that was drawn and all of that. So yeah, so anyways, that's that. So now what are we looking forward to? We're looking forward to this playing out. Let's see. So that's it. So 7 a.m. we get an entry, so price then works out in our favor. Yep, and that was it. So this was this was 1 to 6 thereabout, and that trade also, I think I shared it on the roundup. So let's see, Tuesday. Okay, where are we? Tuesday, yes. So Tuesday, you can see the trade outcome, 1 to 6 thereabout. That trade was taken, so you can see it 1 to 6, the setup and everything, and how it played out, right? So that's it. So Tuesday, our target got hit here. Let's draw it across, and that's it. So no need for this, right? So this zone still remains unmitigated. All right, so that was it. Now this week had a lot of important news coming out. One was FOMC and also NFP. So now after London session, quite early in London session, we got this. So after this worked out, the next setup for us after a break of structure, let me draw this. So after a break of structure, we expect again, we draw another zone, right? Another demand zone, isn't it? So here we have this candle here, so I'll just draw that out. Again, like I said, I always like drawing, the last candle, my zone on the last candle, and that's it for me. So here now we have price pulling back New York session. Okay, actually pushing higher. So this is this is situations where you just wish, oh, I could have, what some traders would say, oh, I could have just held on, instead of 1 to 6, I could have gotten, 1 to 15. Can you imagine? But that's not realistic, right? Because in trading, the market can do anything. After taking this high, the market can reverse. So even though we have, on the 4 hour, we have our target. Let's go back to 4 hour. We have our target on the 4 hour has this guy here. Now you're seeing all of this momentum. It doesn't necessarily mean that price would always just go straight and hit that. Price will sometimes pull back, and I'm going to show you what I mean by that. And also, especially when you have a lot of volatility in the market, sometimes the market just price in the news. And what that means is that the news will go. I'll just show what I mean by that anyways. Let me complicate things right now. So New York session, now we can see price is pulling back. So that will mean that this now becomes our high, our next target, where the money is at. So price is pulling back. So oops. Okay, this is 130. I can't remember on Tuesday what came out. Was that NFP? No, FOMC? No, I don't think so. Anyways, but I had an entry here, so I was expecting this low was a previous low that was that led to that chalk. That continuation ball structure. So hopefully price returns here and then respects that and then gives us an entry, right? So I had this, so 1 to 15 essentially. So let's see if at all it worked out and if we got anything. Okay, so by what time is this? By 3 p.m. you can see the price came, tagged us in, and win the trade. So let's play that out, and it started reversing, and that was it. We got taken out. So essentially price got to 1 to 3.7 thereabout, but that wasn't our target, right? And that's the whole idea about trading. So I did not move my stop loss. I remember this trade and I took a loss. And that was, you can see, I think I can show you that on Tuesday the first trade was 1 to 6, a win. The second trade, you can see that trade 2 was a loss. 1 to 10 thereabout was even what I targeted. So yeah, I took a loss. So I think I targeted 1 to 10. Let me see. Let's see how this was set up. Okay, so I had here. Okay, so my entry was actually not here. I think my entry was around here. Yes, because of this guy. So my entry was around here, so it ended up anyways as a 1 minus 1 trade. But that was perfect. Now this was happening because the market was pricing in the news. And if we can just look at this, let me just see if I can show you this. By the way, this is a good place to just say, hey, if you haven't hit the subscribe button, hit the subscribe button, right? And then also just also to let you know that the stocking profit course is still here for you. Literally 360-degree education program. You have your spoiled with choices. You can either take the full mentorship or get access to just the analysis service, or even just get access to our library of 100 plus videos, walkthroughs, recaps, and so much more. So you're spoiled with choices. So this is for the course, monthly, quarterly, and yearly. You get 10% off if you use Level Up. You also have the SIP analysis service, sample chat markups. You can look at the samples, some of the chat markups, and all of that. What you get essentially, so you have all monthly and with different features in them, and then you have the library access if you just want to access our the library of videos. So you can also subscribe to the SIP library access service, and you get just that. Okay, so let's look at what happened on Tuesday. So essentially we had employment, cost, consumer confidence, and all of that was strong. So USD was strong, and that was what led to that massive sell-off we saw. But that was also a way of pricing in FOMC that was to come out on Wednesday. So this happens a lot in trading, and to come with experience, right? So imagine, for example, we're holding this trade and say, oh, wanted to swing this to the 4-hour high. You can see this would have ended up as a loss, right? So instead of taking a profit, you would have been gnashing your teeth as a result of you holding that trade out. So this happens a lot. So it's something you have to be in mind, and especially when you have a lot of fundamentals in play. Okay, so 6:15, 5 p.m. we're done for the day, nothing. So all of this price did not respect all of this demand zone, so just leave it out. And it's just for you to know that this was because the market was pricing in FOMC that was to come out, and all. So yeah, so that's something to bear in mind. So let's take it next day. So we're done with Tuesday, and then Wednesday 6:30. Okay, so here we are. So this is 6:30 a.m. On Wednesday. So but let's look at if we have anything happening around this area, which I can see we do. So let me draw this candle out. Okay, so yeah, so we have this. I took a loss the previous day here, so just take that cognizance. So what do we expect here now? Well, we expect here you can see this high. So basically price pushed down here, and then that led to a chalk, and now price is around this area. So what do we expect? We expect a continuation, but to get that continuation, for me, I would want to see additional confirmation that price is really ready to just push to the upside. Now this is our swing high, right, on the 15 minutes. Let me just make this one. So this has swing high on the 15 minutes. You can see price disrespected this zone, return to this area, and hopefully this holds, and then we can get that swing trade to take us back up there. So but what we do want to see, well, want to see confirmation. Some of the persons may just use this as enough confirmation and say, okay, I've seen enough, this is it, put my stop loss below this area. Or even if you want to be very conservative, that'll be a lot of pips anyways, but it also gives you good IR 1 to 5, right, depending on what you're risking. But yeah, so something like that. So now for me, I'm just taking that out of the way. For me, I want to see a bullish chalk before taking a position. So let's see if we get that at all. So now this is subtle, but also for me it's enough because it also coincides with time and price. So I'm just gonna take this, right? So with that, I'm gonna have now put my stop typically below this area here. My entry will just be around here. Okay, and then our target is here, right? So let's see if it works out. If not, good. Okay, by 8:30 we're in. 8:45. Okay, got taken out. That's already stop hit. So yeah, so 2 losses, this from New York session and then this London session. So well, we're still interested in trading, bullish, but also something I need to explain here. I remember this trade. Something I need to explain here is this: when you have fundamentals coming out, especially high impact news, the market will always price in the news. I remember this very well now. So looking for this long shouldn't have actually been my bias, and the reason was this: because FOMC was going to be coming out, and because FOMC was going to be coming out, the market had already started pricing in FOMC, and you can see that's why we had this massive sell-off from the previous day. So as a matter of fact, this I could have anticipated the continuation of the sell, because FOMC was going to come out and the market will continue to price in FOMC until the news comes out, and then we get that reversal or that continuation setup. So but anyways, I took the trade and it was a loss. But yeah, so let's see. So we'll take this to the market was just selling off. I remember this, and it was all because of FOMC, so nothing was really happening here. Okay, so now here we have, let me draw this out. So what do we have here? You can see this candle. Let's draw that one out. So you can see here it's still a sweep, not really a zone that the market respected. So let's just draw that. I can even just draw the 4 hour. Let's just draw the 4 hour. Perfect. So price just taps into the 4 hour. So let me go to the 4 hour and let's look at something. Okay, so what is our target still? Our target still remains this high here. But what do you observe here? You see price pushed higher, came so close to hitting that target, and then because you had a lot of fundamentals in play, FOMC and NFP also on Friday, the market started pricing in all of the news, and you can see started selling off. So if you had been holding longs, maybe under 15 minutes, around this areas, you'd see here that you'd have been taken out, right? And that's why it's good to just be conservative in your target the previous 15 minutes high, even if you have a high time frame target and you're taking your profits along the journey. Okay, so what do we have here now? You can see that price has swept this 4 hour low and has failed to close below it. So with this, for me, this was enough for me to say, okay, my target is still valid because price has failed to close below this low, so we're still going to be aiming for this high. And also with the understanding, of course, that you had fundamentals coming out, so the market was simply just pricing in the news ahead of the fundamentals. So here we go. So here now we have a change of character or boss, whichever one you want to call it, right? But this is clear now that the market has tapped into this 4 hour zone and then selected this. So with this now, we have this area, right, for price to return to. Now this is New York session. Now sincerely, I did not take a trade here because I knew with FOMC coming out, there was going to be high volatility, and I was not wanting, and the thing was this: we could get swept, right? So I did not take a position here at all. So anyways, that was that. So 7:45, and then here we go by 7. So this was how FOMC reacted, pushed, but then eventually swept to this lows. You can see that. Now with this was enough to basically just inform that FOMC seemed to be stalling, so this low was not taken. We just had a large week sweep of liquidity for anyone who entered here, and then the market started reversing. Now I actually did enter a position on the 1 minute when I saw this, But yeah, but I'm just concentrating on the 50 minutes here. But anyways, FOMC did this thing, and then that led eventually to a massive bullish run. So that was it. We didn't take that trade. Let's go to the next day, 6:30. Okay, so now we're super clear that the market now has reversed, or not really reversed, but continued in the direction we predicted was going to continue. So a few things. This is Thursday, so now we're going to draw this guy here. Okay, so the market may react to that if at all it pulls back, and that's it. So now with this, we're just going to see get structure before we sort of inform any trade idea. Okay, so here I'm looking for structure still. Okay, 8 a.m. Let's see, do we have anything? That is what we're looking at here. I think we do. So here we have, just draw this so you can see high, low, high, low, high, low, and then high. So you can see here that from this here, that's like a bullish stroke, right? You can see that. So that's like a bullish stroke. So with this, you can put stop below all of these areas here, because you want to protect your stop. So you just put your stop below these areas here. Now this is in my, now you can see here, let me draw this. We still have this now as our target. And why would we do this? Let me explain a few things. We have this area here, right? The market could return to react to this area, but I was pretty much confident that the market may not necessarily return, because after NFP, market had priced in the news already. NFP came out, everything has been assessed by traders, analysts, and what all all of the players, and now you can see this bullish run basically was playing out, and I was pretty much confident the price was now ready to come take out this 15 minutes previous high that we had. So that was a realistic target based on that. And this entry, and also because this was also London Open, so I was pretty much positive that with this kind of bullish run we should hopefully have that continuation to the upside. So let's see. Whoops, so we just got taken out, but you can see here that this low got swept, which is a sweep of liquidity, right? But not necessarily closing below it. So with this ended up of course as a loss, but then we know what we're looking at, so put our stop loss below here, because this basically swept that and then did not necessarily take it out. So we knew that that should hold, hopefully. Now it takes a lot of confidence to actually sort of re-enter and still take the same position, because and a lot of experience here, and also confidence actually, if you know what you're doing. So you can see this came close, but our stop was below that candle, so hopefully broker spread and all of that doesn't take us out. So yeah, that was it. So London session played out perfectly. New York session coming on board. No structure from New York session. No structure worth trading actually. So you can see this was New York session, market was pulling back. Our target wasn't still hit, so the market pulled back all the way, which was unfortunate, right? Not really unfortunate, but if you're a trader who if you know what you're doing, you will still hold. But yeah, so and then Friday, now this is Friday coming into NFP, right? Interesting stuff. So this is 6:15, 6:30. Oh, okay, so now let's analyze what we have here. So here you can see that this is now the previous high that was registered right on the 15 minutes. So this is sort of the conservative target, right, on the 15 minutes based on, sorry, that was based on the previous market structure. So with this now, and I'm also going to show you this because I'm always emphasizing that this is not just hindsight analysis, because I've heard people say that a lot. That's the whole reason why we go through price with back test, so that we can build our confidence and all of that. And all of this you're seeing is not necessarily, it's not hindsight analysis at all. Okay, anyways, that's by the way. Okay, so we have this internal chalk during coming from Asia session. So basically now we expect that this high is going to go, but then we expect a pullback, and then hopefully we'll get an entry, and then that happens. Okay, now remember, when the week started, we're super clear on what price was going to do. We knew what price was likely to go to, right? The previous 4-hour high. And I'm just going to go here. What's my forecast here? So forecast of Friday. London session. So this was the forecast, you know, on London session. So we're here. That was Friday. Yeah, last day of the week, and this was of course before NFP. So you can see the forecast I released here on during London session. So you can see here it said, you know, still our high was still clear, where price was going to go to on the 4 hour was still clear there, and I had said that yeah, we may see some quiet before 1:30, and then, you know, volatility afterwards. So anyways, that's that. So we're still bullish, and you can see the zone I had drawn clearly there. So back to the chart. So here we have a few things. This last candle down, right? Essentially it's a candle that led to the stroke, right? So now with this, we knew that price may decide to mitigate, right? This before we get that push up, and that was basically, you know, the trade idea, right? So like this, I'll stop below this area. Now I chose to use below this area because already here you can see all of this you know, area here. Price could use all of this area as inducement into the zone before we get that push up, and for me that was enough, you know, to kind of to use. Now there's also this candle here, as you can see here, this candle, so basically drawing the zone, you know, also based on, you know, this candle and all of that. So yeah, and our target of course super clear, there's no ambiguity there. So we have this, and then same. So this was 7:45, price seemed to be going without us. 8 a.m. price is pulling back. Oh no, sorry, I think, yeah, I remember something. So I actually had two, yeah, this was one. So I had two you know, setups. So one, I had placed my stop below this area here, and also my entry around here. And then what happened was, you can see clearly price came, tagged me in, and then eventually, you know, went to my position, and then after a while it came out and took me out. You can see that, right? So that was, yeah, so I remember this was my first position. I got taken out, and then this basically was, you know, the next one. Bearing in mind that this was, you know, the low that's protected, right? As a result of, if price, you know, London open price sweeps all of this area and uses this as inducement, taps into this area, then we get that continuation. Even though price sweeps me out, then I know that my stop loss would have to be below here before we get that continuation. So anyways, that was that. So 9 a.m. okay, so this by, if I remember this clearly, so yeah, so this last candle here, so the entry was, yeah, just right there, and then the stop here. So I think that was it. Take this out of the way. Okay, so this was it, and then we got an entry 9:30, 10, 15, you know, and then of course NFP was down to come out, right? But because we were very certain to a large extent that the swing high was going to hold, we've seen market price in, you know, FOMC, and we've seen that massive rejection. So price was now heading toward, you know, our 4-hour swing high essentially. But still at that, I was willing to just stick to targeting the previous high instead of targeting the swing high on the 4-hour. So let's see how all of that played out. NFP coming out now. So next candle was NFP, and that was it. Massive stuff, right? So target smash, target hit, and that was how the week ended. So what do you see here? A comparison between how we started, what we predicted when the week started, and what was delivered, right? So you can see the week started where? Monday here, right? So the week started here on Monday. You can see that clearly. We had one loss, win, loss, another loss, one loss. As a matter of fact, 3 losses in a row, 1, 2, 3, then a win here, a loss here, and then a win here, right? So how many losses? 1, 2, 3, 4, 5 losses actually. Yeah, and it was all based on the fact that, you know, sweeps, we had a lot of sweeps and all of that, that led to losses. But anyways, that's that, right? And sometimes this analysis, for example, because FOMC was coming out, the market was pricing in the news, but we did not account for that during an analysis, and that's why this was a loss. But this shouldn't have been a loss if only we did that. So based on the structure, you can see that price eventually delivered to the 4-hour high. Oh, this was actually the 4-hour high, as a matter of fact. Oh, my bad. So this was actually the previous. Okay, struggle put that there, but let's look at it on the 4-hour. So you can see at the end of the day, our 4-hour high got taken out, right? So you can see our structure that we drew from when the week started, worked out so perfectly. But what do you notice? Price did not just go and then just go hit this. You see price reverse, took out a lot of traders who were probably holding longs without taking, conservative profits at the next, 15 minutes high, took them out before eventually getting to its destination. So that is it. Sometimes price does not move, not sometimes, price does not move in a linear, in a linear direction. It doesn't just move, straight up. Price tags you in and then just goes. No, you're going to have pullbacks. So you have to be able to accommodate for that, and taking your profits at conservative previous 15 minutes high based on the stock and profit strategy is how we win. Okay. Of course, if you don't know the stock and profit strategy, you can join the program, and that'll be it. So I want to believe this has been super clear for you. So let's just take note of a few things and let's see how we did for the week. So here I'm going to do Monday, Tuesday, Wednesday, Thursday, Friday. Okay. So let's see. So this is going to be our weekly roundup. This is week 44, right? Week 44 weekly roundup. So on Monday we had our main trades too. So first one was -1R, second one was plus 3.9, which is almost like 4. Just not to complicate this, okay? We just use 4. Second one was +6. Let's just use +6. So we do 6.2. The third one on Tuesday was -1R. Okay, so Wednesday, what did we get? Wednesday was, the first one was -1. I think that was the only trade for Wednesday. That was the only trade for Wednesday, yeah. Didn't take this because of FOMC. And then the first one on Thursday was -1. Now, this is important because you can see 3 losses in a row, but it didn't really matter, right? Because at the end of the day, you want to stick to the process and not really the profits. Stick to the process, okay? If not, you're just going to be making a lot of mistakes and a lot of errors. The next trade was plus 9.6. I think for this, let me just use 10 to make our calculation later easier. And then on Friday, took also -1. And then the next one was +7. Let me just use 7R so you can compensate for the 9, that's the other one. Anyway, so that's that. So total wins, and then losses. So total wins we have here 1, 2, 3, 4. 4 wins. Losses we have 1, 2, 3, 4, 5. So just below 50% are wins. So 4 wins, 5 losses. So outcome total are so we got so if we do this, this is 4 minus 1, that's 3, 3 plus this, that's 9, 9 minus 1, that's 8, 8 minus 1, that's 7, 7 minus 1, that's 6, 6 plus this, that's 16, 16 minus 1, that's 15, right? 15 plus 7, that's 22. So plus 22 R, yeah. So however you want to look at it, if you're risking 1% per trade, 22%. If you're risking 0.5 per trade, 11%. Okay, and that's of course a positive week by all standards, right? So this is of course with the assumption that all the trades were taken, and that you don't skip trade, you don't select trades, because when you're stuck with the profit that you make per trade, what will most likely happen is that you'll be skipping trades, because you say, okay, will this work out, will this not work out? You're second guessing yourself, and what then ends up happening is that instead of winning, you end up just being inconsistent, because at the end of the day, let's assume you're choosing and you're picking trades, you may end up actually just taking only the losses, and then you say, oh no, my strategy is not working. But it's not the strategy, it's your mindset. Your mindset is what is cheating you, because you're simply not just following the process. You're just picking and you're choosing trades randomly. So you just have to trust yourself, and that's why back testing is important, analyzing is important, previous price action, because it helps you to develop that confidence going into the market. So you're not stuck with the profits that you're making, but you're simply embracing the process. And when you embrace the process, you begin to see the profits rolling. So hey, that is it for you for this week. I want to believe this has been beneficial to you, the first week in the month of November. So look forward to the second week in the month of November. Look forward to the weekly forecast if you're part of the mentorship. If you're not part of the mentorship, please do join the mentorship because that'll be beneficial to your growth and to your trading. If you're watching this video, I believe that's because you need something like that, and I'll be right there waiting for you to also see that you become a success true and true. So it's been a pleasure. Thank you for watching. Stay stuck in profit, and see you next time. Bye bye.